Hello, good morning, ladies and gentlemen. How are you doing this morning? And trust you all had a wonderful weekend. Well, before we kickstart the session, I would like to get some positive feedbacks. As if you can see my screen and you can hear my voice clearly, I will appreciate that you type in hi in the comment section so that we can get this live session started. So if you can see my screen and you can hear my voice, please kindly type in hi in the comment section so that we can kickstart the live session for today. So let's see what we have in the comment section. Okay, I can see Dev Lion King. Good morning. Thank you. 204. Good morning. 275. Thank you. Rosaline 0715. Okay, thank you. 237. Good morning. 781 is asking when it starts. We are already started. Please confirm that you can see my screen and you can hear my voice clearly by typing hi in the comment section, please. Okay, 603, good morning. Glad to have you around this morning. YYH, thank you. 603, good morning again. Okay. Then Selinba, thank you. 983, thank you. All right, so I'm going to be taking this as a positive feedback that we are good to go this morning. I'm so excited to welcome you to yet another promising session on the Extra and Speed. My name is Sheriff Daramola, and as usual for the next 1 hour, we shall be embarking on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, being the first trading day of the week, this is what we normally do right here. We choose random pairs which we are going to be monitoring throughout the course of the week. And in fact, I have like 5 to 6 pairs that I am willing to share with you, as there are beautiful trading opportunities that we could take advantage of during the course of this week. And also it's a very good opportunity for you if you have any pair, any financial instrument you want us to look at, be it a commodity, a currency pair, a cryptocurrency, whatever it is. Feel free to drop it in the comment section and be rest assured that I will try to incorporate it into my plans for this week. With that being said, also, I would like to welcome those who are joining us for the first time. So you're welcome on board. And if you are not yet to understand what we do here, what we simply do is to gather here on a daily basis in anticipation of the New York session, where we choose random pairs. We review these pairs and identify trading opportunities lining up for us during the New York session, and subsequently we come back here to review all the pairs we have been monitoring, and we shall be sharing ideas on how to manage this trade. So welcome once again. I will implore you to stay tuned in to be part of the session. It comes up 10 a.m. UTC on a daily basis. So the more you be with us here, the more you get to understand how this works, and at the end of the day you will be able to take your individual decisions by using the ideas we share here to make your own personal decision. So with that being said, here let's dive into the charts and let's see what is going on in the market right now. So as usual, the first thing we are going to be doing here is to look at the macroeconomic event. We want to be looking at the economic calendar, and let's see what we are going to be looking forward to for this week. And in fact, we have a couple of events that we shall be looking forward to for today. For this week rather. And based on the pairs I have chosen for this week, we have on Tuesday, that is tomorrow, February 21st, we have the S&P Global publication that is CIPS Services PMI, which will be coming up early tomorrow morning, and this is one of the events we will definitely want to be looking forward to. Then on Wednesday we have the FOMC minute also coming up on that day, and on Thursday we have the GDP annualized for quarter 4 on the 23rd of this month. So these are high impact events that all participants in this market will be looking forward to, and we shall definitely be seeing the anticipation of this event reflect on the chart as price action. So we are going to be taking a technical analysis of what is really going on in the current market structure, where we shall be using this market structure we are going to be identifying to take advantage of any trading opportunity. And one more thing that we need to take note of today is that in the US, the United States of America, today is the President's Day holiday, and the stock and the bond market will be closed in the US, and this might likely subdue trading activity for today. We might likely not see liquidity in the market today because of the fact that it is a public holiday in the US. So with that being said, here we shall be diving right into the chart at this point, and the first commodity we are going to be looking at today is the US oil. On the US oil, I already have a buy position running, but I will be sharing with you what led to that decision, and in fact I have moved my stop loss accordingly to secure that position just in case price action goes the other way. Before we go into the details there, the first thing we are going to be doing is to scale into the daily time frame, and on the daily time frame, this is what we were able to identify here. So we have been monitoring the US oil for quite a while now, and one of the things we observed on the US oil is the fact that it has been bearish in the last 7 to 8 months. And as a result of this, to further emphasize the strength of the sellers here, we were able to connect the series of lower highs here, which has given us this beautiful resultant bearish trend line that you can see on your screen right now. And as you can see, price has uniformly respected this bearish trend line to further emphasize the strength of the sellers at this point. However, during the third week of the month of January, we saw the breakout of that trend line with the hopes that price action will continue to the upside from this level. And one important thing about the breakout of the trend line here is the fact that it shares a beautiful confluence with that $80 level. If you had been with us prior to this live session, you will know how important we laid emphasis on the $80 level. And why is that so? If you look at the current market structure here, that is in the last 3 to 4 months, you would notice how the $80 level had been a strong selling niche in this market. Look at what happened here in the month of November. We saw selling pressure here as soon as price action got into the $80 level. The same thing also happened in the month of December last year. And if we fast forward into the later part of December, we saw how the year closed around the $80 level, and this new year to 2023 started on a bearish note. As you can see, this bearish engulfing candle taking us out of that structure to further emphasize the strength of the sellers at this particular point in time. And fast forward to like 3-4 weeks ago, we saw a situation where price action actually broke out of the bearish trend line, as you can see here, and we were thinking that price action will continue to rise to the upside. So after the breakout of that structure, in fact prior to the breakout, we had this situation here where we identified a double bottom structure, which from a technical standpoint is a very strong reversal pattern. And for this reversal pattern to mature, we need to identify a neckline which coincidentally shared a confluence with that $80 level. So we saw the breakout happen here. That was on the 17th of last month, and we were hoping that price action will continue to rise to the upside here, but that did not happen here. As you can see, as soon as price got into the $82.50 level, One thing we noticed here is that selling pressure resumed in this market, negating all attempts by the buyers to break out of that structure. And in fact, this led into a situation where price was caught within a channel between the $82.50 level and the $78 area, and this lasted about 3 to 4 weeks. So price action was caught within this area, hereby giving us a clue into the indecision that is currently in this market. Now, looking at what happened here since the month of February, that is the beginning of this month, we saw the breakdown of that channel at the $78 level to further emphasize the strength of the sellers here. And in the last couple of weeks now, we have seen a situation where price has continued to trade below the $80 level and the $78 area to further emphasize this area as a strong supply zone going forward. And with this current situation here, it is very reasonable to continue to look out for selling pressure, considering the fact that price is still trading below that strong selling niche, which falls around the $80 level. However, when we look into what has been happening here since the month of December, we notice that price action, as soon as it tested the $70 level, that was the lowest point price has ever been throughout the course of last year. And since the retest of the $70 level, one thing we noticed here is that price action had continued to find higher lows to give us a clue that there is an attempt by the buyers to break out of this current structure. And as a result of this, we had this a trend line figured out after connecting the series of higher lows here to give us this temporary bullish trend line, at least for the meantime, as we continue to see buy pressure resume as soon as price action tests that bullish trend line. And the same thing has happened here during the end of last week trading session. We can see here that as soon as price tested that bullish trend line, we saw a sharp rejection of that structure, giving us a clue that there is a building up of bullish momentum right behind the scenes. So at this point, we really need to understand how price action is playing out around here to decide our buyers for this new week. And one more thing I would like to call our attention to, based on the current structure here where price action is testing that bullish trend line. If we go to as far back as the month of September, we can see how that level also has been a strong buying niche. So at this point in time, this is a very strong area for bullish momentum here. So we need to see how price action is going to be reacting to this current structure to decide what our next line of action will be and what our plan it's going to be like for the new week. So what we are going to be looking forward to around this area is to scale down to a much lower time frame to see how price action is reacting to that level. So there are two things I think could happen around this area. Looking at it from a long-term perspective here, there is a likelihood that price could break down that bullish trend line, retest of structure around this area, followed by selling pressure below the structure to emphasize a sell-off in this market. That is one possibility we are going to be looking forward to as we head into the lower time frame. Another thing about this structure is the fact that price could respect that bullish trend line one more time to incite a bullish momentum here. Now, if a bullish momentum is going to be happening around the structure, we need to know where and how this is going to happen. So that is why we'll need to scale down to a much lower time frame, like I would like us to scale into the 4 hours time frame first before we dive into a much lower time frame. So we shall be focusing on the area around the $76.50 level, which shares a confluence with that bullish trend line we just identified here. So if we scale down a little bit into the 4 hours time frame, this is what I was able to see here on the 4 hours time frame. Now if we zoom out here, remember we identified that channel between the $82.50 level and the $73 area. This was since the month of November. So since the breakdown of the $82.50 level here mid-month of November, price had continued to trade below that area. So, and in fact, we have a beautiful flat channel here which further emphasizes the indecision in this current market. And one thing I would like us to know in terms of the fundamentals of the US oil is the fact that there is this high hopes in the market that as soon as the Republic of China releases the COVID policy, that is restrictions on the economy, that there is going to be a boom in the oil price. And this is as a result of the fact that China is the highest importer of oil, so probably the demand of oil is going to increase. And you would notice that the consolidation phase we have been witnessing here falls within that area where during that time when the restrictions on the economy has been placed. So since the month of November, price has been trading below that structure. And one important thing we also need to take note of here is that we have a strong demand zone somewhere right around the $72 area. So this demand zone has been holding price supported for a while now, and it gives us a sign that buyers are likely going to be coming in from this current structure. Now, if we zoom into what has been happening here, that is throughout the course of last week's trading session, we saw this bullish momentum, and thank goodness we were part of this bullish move last week as price action continued to find higher highs. But as soon as price got into that $80 level, one thing we saw here is that the market structure transitioned into something that looks more like a reversal pattern here. So we have a reversal pattern here where the $78 level is serving as a neckline of that structure. And during the later part of last week's trading session, we saw our price broke down that neckline area to signal a further strength in the selling momentum around this area. And if we look at this from a technical standpoint, whenever we cite a breakdown of a structure like this, we expect that price action will at one point do a retest of that structure to incite another wave of bearish momentum. So with this idea in mind, we needed to understand how price action will be reacting to the $76 level during the early hours of this new week to decide what our next line of action will be. So in that regard, to understand how price action is reacting to the $76 level, we will need to scale down to the 1 hour time frame. But before I go down into 1 hour time frame, I would like us to see it one more time how this area has been a strong selling niche, and we are at a point where we need to really understand what is going on here to decide what our next line of action will be, as we have a strong demand zone around the $73 level as well. So if we are going to be selling at any point in time, if we see a reversal pattern that supports a trend continuation to the downside, we'll definitely be having our TP target somewhere around the $73 area. So let's scale down to the 1 hour time frame. Let's see how participants in this market has been reacting to the $76 level, at least since the beginning of this week. So when we scale down to the 1 hour time frame, this was what I was able to identify on the 1 hour time frame. So the week has started on a bullish note here. And one thing we saw during the end of last week's trading session was that as soon as price got into the $76 level, we begin to see some buy pressure resume around that area, negating that structure. And I'm of the opinion that this might likely be a retracement of that previous impulse leg. Remember, we had an impulse leg here which broke down the neckline we identified at the $78 level. And from a technical standpoint, whenever we cite a breakdown of structure like this, there is a tendency that price action will come back, do a retest of that structure to incite another wave to the downside. And when we observe the buy pressure that resumed around the $76 level, at this point we would have to consider this as a retracement phase that might likely retrace back into the structure to incite another wave of bearish momentum. But if it so happens that price action breaks out of the $78 level to the upside, followed by buying pressure above the structure on our lower time frame, we'll definitely be thinking of adding more position to our existing trade. So at the beginning of this week, let me zoom into what has been going on since the early hours of today. So at the beginning of the week, we initially had a situation where price started the week at around the $76.35. with a bullish attempt, and as soon as price tested the $77.90 area, we saw selling pressure which brought price back into the support level. And what this simply tells us is that we had an initial consolidation phase. Emphasize that there was a little indecision in this market initially, at least in the first 4 hours of the trading week, before we saw the breakout retest of the $77.90 level. And you know, from a technical standpoint, whenever we have a flat channel like this, all we want to be doing is to remain patient, look out for either a breakdown of the channel or a breakout of the channel for trading opportunity at this point. And this was the reason why I had bought above the $77.90 level after I saw the breakout retest of the structure. And if you are part of this buy position presently, well done to you guys for being on standby to catch that move. And at this point in time, I will be advising you to move your stop loss to somewhere right around the entry point to close this market at break even, just in case price action moves against us. And the reason why I'm telling us to move our stop loss to break even at this point is simply because of the fact that we are on a long-term bearish momentum here, and anything could actually happen from this current structure. So whatever position we are in right now, we need to be locking in some profit, as this is more or less a counter trend opportunity. And for those who had missed out on this opportunity here, that is the breakout retest of the structure, well, there is a tendency that price action could still give us another opportunity to join this rally to the upside. So, and one of the scenarios I'm looking forward to is to see a situation where price might likely drop back into the $77 area, or in fact drop as deep into the channel here, where we start seeing another buy pressure resume again on our lower time frame to incite a trend continuation to the upside. And if this happens, it's going to be a good opportunity for us to be buying the US oil. And one thing I would like to state here for all buyers who are buying the US oil at this point, I would advise us to continue to monitor price action, move our stop loss accordingly to secure position as price action moves in our favor. And one thing I would like to state here is that as soon as price gets into the $78 area here, which I showed you earlier is serving as the neckline of a reversal pattern we identified on the 4 hours time frame, we want to move our stop loss, secure the position as we wait out and see how price action will be reacting to the $78 level to decide if we are going to be adding more position to our existing buy trade, or we shall be getting ready to sell at this point. So what do we want to be looking out for around the $78 level? Now, one thing is, if we start seeing multiple rejection of this area, that is selling pressure on our lower time frame, and more specifically if we are seeing a reversal pattern like a double top structure, we will definitely be getting ready to join the second wave of that bearish momentum to the downside. However, if price action breaks out of the $78 level followed by buying pressure above the structure, it will be a beautiful opportunity for us to add more position to our existing trade. So this is what I will be looking forward to buy the US oil for this week. However, in as much as we continue to look out for buying opportunity here, we should not ignore the possibility that sellers might likely come in at this point. And the reason why that is, remember, we are on a long-term bearish momentum here on the US oil, and there is a likelihood that sellers might likely come in. Now, how do we intend to take advantage of a sell momentum if it actually happens in this market? Well, the first thing I'll be doing here is to take into consideration this consolidation phase here following the test of the $76 area. And if we are going to consider that, we want to be bringing out our line chart, connect the series of higher lows that you can find here. Well, this is how I do it whenever I have such kind of structures that don't have a linear higher low. What I do here first of all is to connect, hold on a second, let's see how this, then I bring back my candle chart, then readjust it to fit into the current wicks that you have here. So you can see we had higher lows around this area. So for me to be selling the US oil here, I would likely see price action break down that bullish trend line, followed by selling pressure below the structure then I will be looking forward to selling at that point. Now, if price action continues in such a way that it breaks down the $76 level, then this will be another opportunity for us to add more position to our existing trade. So it's a simple setup we have here on the US oil. Remember, we are in a buy position currently, and we have the $77 level as a yardstick for buying opportunities. So as long as price remains above the $77.90 level, we continue to look out for buying opportunity here. And one interesting thing about the $77.90 level is the fact that it shares a beautiful confluence with this new trend line we just identified. So let's see if the trend line still has the capacity to continue to hold bullish momentum, and if that's going to be the case, we shall be seeing something like this and boom for a movement to the upside. But if price action breaks down the trend line, then definitely this will be seen as a bearish signal. Then we shall be getting ready to join that decline to the downside. Now, if price action does not drop back into the $77 area, that is, if price action does not drop back and instead continue to find higher highs, well, we have a structure here. As you can see, around the $77.40 level, we have been witnessing selling pressure around that area. So because of this, we have a structure here. Hold on a second. I want to identify that structure so that we can use it as a guide during the New York session. So we have the $77.40 level. So I will be labeling it for the sake of clarity. So we have the $77.40. So if price action climbs up, then we continue to look out for buying opportunity above that level. So these are areas where we continue to look out for opportunities to add more position to our existing trade. So these are my views here on the US oil for today. If you have any questions, feel free to drop your inquiries in the comment section of the video. So I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next pair. Okay, I can see RFP, good morning to you. Brackups, okay, thank you for that compliment. Okay. YDA wants us to do BTC. All right, I will pen that down now. So I will try to incorporate it into our plans if I have time. Okay. Then we have 857 buy, thank you, good morning. 634, good morning to you. Sadi 8, good morning. I saw 983 here asking for GBPJPY. What's GBPJPY? I'm not sure I know what that is. Do you mean GBPJPY? Kindly confirm if that's what you mean so that I can see if I can include it into my plans for today. All right, so in the absence of no questions, we shall be moving on to the next option. And the next option we shall be looking at today is the US Tech. And on the US Tech, we have been quite profitable since the beginning of the year on the US Tech. And right on the daily time frame, the first thing we observed on the daily time frame is the fact that price has been bearish. And in fact, throughout the course of last year's trading session, we saw a situation where price has been finding lower heights, and as a result of this, we had this bearish trend line figured out at this point. Now, things got a little bit interesting during the month of June as we saw what happened around the $11,000 level, where all attempt by the sellers to break down the structure has been negated by buying pressure as sellers were unable to go further to the downside. And this has led into a situation where price finally broke out of that bearish trend line during the later part of last month to further confirm that the bearish trend line does no longer have the capacity to continue to hold bearish momentum. Now, the bullish momentum we have been enjoying here since the beginning of the year, right above the $11,000 level, appear to have culminated at around the what's it called, around the, is it 11,900? Hold on a second, please. I'm trying to, all right, sorry for the break in transmission. So like I said here, as soon as price broke out the bearish trend line, giving us a sign that that trend line no longer have the capacity to continue to hold bearish momentum, we saw a situation where this bullish momentum appeared to have culminated at around the 12,900 level, and this has been happening here since the beginning of the week. As we can see, as soon as price tested the 12,900 level, we have been witnessing some selling pressure around that area, which appear to have transitioned into a consolidation phase around this area. And now looking into the past year to see how important the 12,900 level is, you will see that this level had been a major determinant of price action in the past. Look at what happened here in the month of March. We saw this level serving as a buy niche at one point in time before we saw the breakdown of that structure happen here in the month of May. We saw a retest of structure further emphasize the strength of sellers at this area, though we had a little breakout of that structure, which we saw buy pressure a couple of times again. Then we saw another breakdown here in the month of August, and since the breakdown happened in the month of August, price has continued to trade below the 12,900 level to further emphasize the strength of the sellers at this point. And if we zoom into what has been happening here since the beginning of the month, you would notice that as soon as price tested the 12,900 level, we have been witnessing selling pressure, and it appears price action has transitioned into something that looks more like a reversal pattern at this point. And taking a further dissection of that reversal pattern, it's following this impulsive move. It's looking more like a double top structure where the need to identify a neckline area to guide trading activity for this week is very, very important at this point. Now, to identify the neckline of this kind of reversal pattern here, we will need to bring out our line chart so that we can have specific points of connection, and it appears that the $12,300 level, or $12,310, I guess, will be most appropriate to situate our neckline area at this point. So using the hold on a second, let's readjust this. Okay, so we have something like this right now, and looking at the structure here, we have the 12,310 level. So we have a double top structure after testing the 12,900. Price was unable to break the previous high. Price action comes back into the 12,310, where we have been noticing buy pressure here in the last couple of weeks. So for this reversal pattern to be mature, what we need to see is price breaking down the neckline area, followed by selling pressure below the structure on our lower time frame. Then we could be thinking of selling the US tech at this point. Then in addition to the reversal pattern we just identified here, I would also want us to take into consideration the fact that since the beginning of this year, price has continued to find higher lows, and when we have higher lows like this, a beautiful sign that it's bullish. And what we want to be doing is to connect the series of higher lows here, and when we connect the series of higher lows, what we find here is this bullish trend line. And this bullish trend line has been respected since the beginning of this year, but it appears that it was broken during the later part of last week's trading session to further give us a signal that the bullish trend line may no longer have the capacity to continue to hold that bullish momentum. And if that's going to be the case, we need a further confirmation in that regard. Hence, we have identified the neckline area where we want to be scaling down to the lower time frame to see how participants in this market trade, we'll be reacting to this 12,310 level to decide what our next line of action will be. In fact, on the lower time frame, we shall be looking at somewhere around the 12,400 and the 12,310 level to determine what our next line of action will be. So with the information we have gathered here on the daily time frame, we are looking out for selling opportunities below the 12,310 level. But one thing I would like to state here is that there is still a likelihood that this consolidation phase that we have here could still transition into a trend continuation pattern, and this could happen if buy pressure still continues above the 12,310 level to push price to the upside, and if this leads to a further breakout of the 12,900 level, we'll definitely be looking out for buying opportunity. So let's scale down to the lower time frame. Let's see how participants in this market has been reacting to the structure since the beginning of this week. So scaling down into the lower time frame, we shall be going straight into the 1 hour time frame. This is what I was able to identify on the 1 hour time frame. Now this is the 12,310 level here, and look at what has been happening since the beginning of the week. Remember, we had this buy pressure coming on Friday last week, just right above the 12,200 level, which has been a strong demand zone. Let me show you that on the 4 hours time frame so that we can be on the same page here. So this is the 4 hours time frame, and that's the bullish trend line we said has been guiding bullish momentum since the beginning of this year. And I showed you on the daily time frame how the bullish trend line appears to have been broken. Now, one thing about the structure here is the 12,200, which we identified on the daily time frame. It has been a demand zone for quite a while, and on Friday we saw the rejection of that demand zone here. Price action climbed up a little bit, and what we have here is a beautiful consolidation around this area. And if I scale back down to the 1 hour time frame, that consolidation phase will be more visible. So this is the consolidation phase here. So since the beginning of this week, we have seen a situation where price has been caught within this channel, right within the 12,370 and the 12,320 area. So we have a resistance point for the week sitting around the 12,370, and we have a support level for the week sitting around the 12,320 area. And you know, from a technical standpoint, whenever we have such a structure like this, all we want to be doing is to remain patient here, wait out for price action to either break out of the structure or break down of the structure to give us a trading opportunity. And with the continued buy pressure resuming around the 12,320 here since the beginning of the week, coupled with the fact that we are sitting right above a strong demand zone, there is a likelihood that price will be breaking out of the 12,370. So as a result of this, I have a buy stop order sitting right above that structure, which might be triggering as soon as price break out of that structure. And if a further breakout of the 12,400 level happens, we'll definitely be thinking of adding more position to our existing trade on the US tech. So I remain bullish on the US tech with a buy stop order sitting right above the 12,370. So if price action continues to the upside from this level, we shall be comfortable in our buy position. However, if it so happens that selling pressure resumes here and it breaks down the 12,320 area, continue by selling pressure below the structure, I would be thinking of selling at this point, and with a caveat here, as soon as price drops below the 12,320 and it continues to move in our direction, we will be moving our stop loss accordingly to secure that position. And the reason why I said we are going to be moving our stop loss to secure the position is because of that important demand zone that we have around the 12,250 and the 12,200 area. Now, if price action continues to drop to the downside here, breaking down this level, then that will be a beautiful opportunity to add more position to our existing trade here. In fact, a breakdown of the 12,200 or the 12,250 area will be a beautiful opportunity to join a decline from this current structure. So these are my views here on the US tech. I hope you'll be on standby to catch your moves when they finally happen. And another thing I normally say in the live session here is that to make things easier for you during the New York session, you would want to munch my screen so that you can use it as a reference point when you're about to make your individual decision on these pairs that we are discussing during the live session here. So with that being said, here I will be moving on to the next pair, and the next pair we shall be looking at this morning is the USDJPY. So on the USDJPY, let's run through the daily time frame. Remember, the USDJPY was the most profitable trade for us last week's trading session, as we were able to ride the move all the way from the 131.00 level into the 135.00 area, where we had our TP target last week. So in fact, we were able to scoop over 800 pips on the USDJPY within this range here, as we had multiple entries at each breakout of structures. Now that we are going into the new week, we want to be having a fresh new look at this current structure. But in order to understand how this market is evolving right now, it's important that I refresh our memories on the USDJPY. And in order to do that, I want to be zooming out a little bit and go as far as the last 2 years here to see what has really been going on in this market. Now, if we look at what has been happening here since the year 2020, you will notice that price action has been very, very bullish, and as a result of this, I had a bullish trend identified here, as price action has continued to find higher highs and higher lows. Now, things got a little bit interesting during the month of April of last year, as we saw that as soon as price climbed above the 127.00 level, we begin to see some consolidation phase around this area to further emphasize the indecision in that market at that particular point in time. And this lasted about, I think, 2 months before we witnessed the breakout of that structure. And since the breakout of the 131.00 level happened, we saw how the bullish momentum was so strong. We saw a retest of structure, and in fact, price action moved over 2,000 pips in that direction before we started witnessing selling pressure during the month of October. And as a result of that, price crashed back again into that channel here. Remember, the channel we identified in the month of April / the month of June, price action fed into that channel. And remember, we didn't trade the USDJPY for like 2 weeks until a couple of weeks ago. And the reason why we didn't trade it then was because we wanted the reversal, the consolidation phase here to mature. And one thing we saw here on at the beginning of the month was that price action appeared to have evolved into a reversal pattern within this channel here in the form of a double bottom structure. And whenever we identify a double bottom structure like this, the next thing we want to be doing is to identify a neckline for that structure, which falls around the 131.00 area. As you can see here, very important structure that has been a major determinant of price action, at least in the last 10 months. And we had a neckline around that area, and for this reversal pattern to be mature, we need a breakout retest of the structure to confirm that we have a mature reversal pattern. And this is exactly what happened in the last 2 weeks here. We saw the breakout, we saw retest. In fact, we had multiple rejection of the 131 throughout the course of 2 weeks ago before we enjoyed this bullish momentum to the upside last week. Now we have a situation right now where price is back into a key structure at the 135.00 area. And if you go to as far back as the month of December, you will see how this level also has been a major determinant of price action. It was initially a buy niche before we saw the breakdown here during the later part of the month of December. And since the breakdown of the structure happened, price had continued to trade below the 135.00 level to emphasize the strength of the sellers around this zone. And what makes the 135.00 level more interesting here is the fact that it also shares a confluence with that bearish trend line that we identify here. So the bearish trend line started in the month of October. So this is where that bearish momentum started. We saw a test of that bearish trend line, and when we connect the series of lower highs here, we had this resultant bearish trend line, which I said shares a beautiful confluence with the 135.00 area. Now, the question that we are going to be asking ourselves as we head into the new week is, how is price action going to be reacting to this key structure that we have here? So we have a trend line there. We have a 135.00 level, which has been a strong selling niche in the past. And if we take into consideration the fact that this area has been a strong selling niche, coupled with the fact that we are around the bearish trend line, the first thing that will come to mind is to be thinking of selling the USDJPY. Now, to sell the USDJPY at this point, there are a few things we will need to look out for. Something like a reversal pattern around this area, probably a double top structure, a head and shoulder pattern, or if a rising wedge, whatever it is, in form of a reversal pattern, breakdown retest on our lower time frame, then we could be thinking of selling at this point. But another thing I would like us to note at this point is the fact that, remember, we have a strong demand zone around this area, where a breakout of the 131 level is a beautiful sign that buyers are still very strong in this market. And if we go to as far back as the month of June last year, we saw what happened after price action broke out of the 131 level. We saw bullish momentum spring in from that area. The same thing also happened here in the month of August, where we saw a retest of that structure, inciting another bearish bullish move. And look at what has happened here in the last couple of weeks. We've been witnessing buy pressure around that area, so we need to be very, very careful at this point, as the confluence we have here might also witness a situation where price will be breaking out of the 135.00 level, taking out all the sell position around this area, bringing some liquidity for buyers, which will be reflected on the chart as buy pressure on our lower time frame, after which an opportunity to trade and buy the USDJPY could come in above that structure. So at this point in time, there are two things that could happen here. We could see selling pressure coming in from that below that structure, and at the same time we could see a breakout of that structure to incite a bullish momentum. Now, to decide and know what is going to be happening this week, we need to scale down to a much lower time frame so we can monitor how participants in this market will be reacting to this current level here to decide what our next line of action will be. Now, scaling down to a much lower time frame, should we go to as far back as the 4 hours time frame first of all before we go into the daily to the 1 hour time frame? So this is the 4 hours time frame here, and one thing we observe, let me just zoom into the current structure here. And if we look at the current structure here, last week's trading session, we saw our price action hit our TP target at the 135.00 level. We saw selling pressure resume around that area, and in fact, since midweek last week, price action was caught within this channel around the 135.00 level and the 133.800. And if we go to as far back as a couple of weeks ago here, we have this bullish trend line figured out after connecting the series of higher lows. So that's the major bullish trend line, and last week we saw a deviation from that major bullish trend line, which resulted in this bullish trend line that you saw here. So throughout the course of last week's trading session, we saw a situation where price has continued to respect this bullish trend line. But what we noticed during the later part of last week was the fact that price appeared to have broken down that bullish trend line, which is a good sign that the trend line may no longer have the capacity to continue to hold bullish momentum. And coupled with the selling pressure here, with the breakdown of the structure, we might likely be seeing a retracement of this bullish move that happened last week. And if that is going to be the case here, we might likely see a situation where selling pressure resumes below the structure, bringing price back into this major bullish trend line which we identified earlier, and at this point that trend line also shares a beautiful confluence with the 133.00 level, a level which has been holding strong selling niche in the past before a breakout of that structure happened last week. So this will be a very critical point to monitor how price action will be reacting to this level to decide if we are going to be adding more position to our sell trade if price action breaks down the structure to the downside. And if the contrary happens, that is, buy pressure resumes above this level, then we shall be getting ready for another wave of bullish momentum at this point. So this is what we are going to be looking forward to. But in order to know if the selling momentum will become valid, we need to understand and see how participants in this market will be reacting to this current structure to know what our next line of action will be. And to do that, we want to be scaling down to the 1 hour time frame. And when we scale down to the 1 hour time frame, this is what I was able to identify at the beginning of the week. So the week started on a bullish note here as we saw price action resume this new week at the 134.150 level, which I've identified as the support level for this week, and we saw the bullish momentum climb up. But as soon as price tested the 134.500 level, we saw selling pressure resume around that area, bringing price back into the 134.150 level. And one thing about the 134.150 level here is the fact that since last week Friday we have been witnessing buy pressure from that level, and the same thing has been happening here since the early hours of today. As soon as price got into the 134.150, we have been seeing buy pressure resume from that area. But now that we have an engulfing candle breaking above that structure, we can see that buyers are still finding it very, very difficult to push to the upside from this level. So as a result of this, we are going to be position ourselves for any buying opportunity right above the 134.500 level, where a buy stop will be most suitable at this point in time, and with the hopes that price will continue to climb up to break out of the 135.00 level, where that will be welcoming additional positions here. But if that does not happen and instead price action breaks down the 134.150 level here, taking out all the buy position around the structure, we might likely be getting ready to join that sell momentum back into that bullish trend line that shares a confluence with the 133.00 level we identified earlier. So what we are going to be looking out for selling opportunities here is to see price action take out the buy positions here, followed by selling pressure below the structure in our lower time frame. Then we could join that decline to the downside, and if a further breakdown of the 133.800 level happens, we want to be adding more position to our existing trade. So these are my views here on the USDJPY for today. Let's continue to monitor price action so that we can be part of that trading opportunity if either a breakdown of the sell of the demand zone here happens. So we are looking for selling opportunities below the structure, and we are looking out for buying opportunity above the structure. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. As usual, I assure you that I will be reading the comment section from time to time to see if there are any questions before we move on to the next pair. Now, I would like to take the GBPJPY. I wish I could take the XAU USD, but there is no time. Let me just attend to 6983 who wants us to treat the GBPJPY. So on the GBPJPY, let's quickly run through what is happening on the GBPJPY. It's been a while since I have traded that pair, but let's quickly look at what is happening on the daily time frame here. So if we look at the daily time frame on the GBPJPY, well, the first thing we should observe is the fact that price action has been consolidating here at least since the month of April last year, giving us a choppy situation on this pair. Now if we zoom into what has been happening in the last 3 to 4 months, though it has been bearish, so the first thing I will do here is to bring out my line chart so we can connect the series of lower highs here to give us that resultant bearish trend line at this point. So if we consider this bearish trend line, the first thing that comes to mind is to be thinking of selling opportunity. But if you look at the current structure here, you will see that price action, there is a strong demand zone around this area. Price has been unable to break the previous low, so the sell pressure here is a suspect. We need to question that sell pressure that we notice around this area. So let's identify this area as a demand zone first of all. So I will be labeling this zone as a demand zone. So I like to give this a white color, give this 14 and place it right inside that box. I like to give this something thicker. Okay. Now, one thing we observed the last time price tested that bearish trend line was in the month of December here. And following this impulsive move to the downside, we saw our price has been rejecting that demand zone at the 156.00 level a couple of times. Price was unable to break the previous low, and it appears we are having something here that looks more like a reversal pattern. And whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify a neckline for that reversal pattern, which will be serving as a yardstick for trading activity. So to identify the neckline of that reversal pattern, we want to be bringing out our line chart so that we can have a specific point of connection, and it appears the 162.00 level appears to be the most appropriate area to place our neckline area here. Hold on a second, let me do some readjustment here. Okay, good. So I will be giving this a purple color while I label it 162.00 level. Okay, so we have something like this. Place it at the top right hand side of our screen here and give that line a purple color. Good. Now we have a reversal pattern here, but note that this reversal pattern is yet to be confirmed. For this reversal pattern to be confirmed, we want to see price action do a breakout of that reversal part of that neckline area at the 162.0 level, where that area will now become the new demand zone. Looking out for price action doing a further breakout of that trend line to emphasize the strength of the buyers at this point. So now that we have a beautiful information here on the daily time frame, it is now time to scale down to a much lower time frame where we want to see how price action is currently reacting to the 162.00 level to determine what our next line of action will be. Now if we go down to the 4 hours time frame here, the first thing you would observe around the 162 area following this impulsive move that we have. Remember, we have an impulsive move that started on the 10th of this month, and as soon as price tested the 162, we saw a situation where price is caught within a consolidation phase here. Now this consolidation phase, we need to identify what is happening around here. So if we have a new support levels, probably around the 161, I think 160.900 seems most appropriate here. So 160.900, 160.900 level. I'll give this a small color and it does a different color so that we can differentiate it from the previous structure here. So we have something like this, which has been a support level, push price to the upside. Then we have a trend line here, price finding a lower high, and we have a bullish trend line here, and this is simply what we have on the GBPJPY. So we have something that looks like a flag pattern, or you could call it a triangle pattern, and this is a beautiful consolidation phase here, which could transition into a trend continuation pattern, and at the same time it could transition into a reversal pattern. So how do we intend to take advantage of a trading opportunity using the current market structure we just identified? Well, the first thing we are going to be doing now is to remain patient, to wait out for a breakout of the structure for trading opportunity. So if price action does break out of the bearish trend line there, by pressure above this level, would be a beautiful opportunity to join in anticipation of the breakout of the neckline at the 162.00 area. However, if price action continues to drop in such a way that it breaks down the 160.900, a level which shares a confluence with that bullish trend line that you have there, then that will be a beautiful signal that sellers might likely be coming in, and we might likely be seeing a retracement of that impulse leg into somewhere probably around the 159.00 area or the 159.500 before another wave of bullish momentum will be happening from the structure. So for in the meantime here, what I will be advising you to do, I don't know if 983 is still in the house. If you are still in the house, what I'll be advising you to do at this point is to remain patient, as we want to see how price action will react to this current structure. And like I said, a breakout of the structure will be giving us an opportunity to buy, and a breakdown of the 160.900 level will be giving us an opportunity to sell. So let's be on standby to catch that move if that is going to be the case here. So if you have any questions, feel free to drop your inquiries in the comment section as I read through the comment section. And unfortunately, I wouldn't be able to take the XAU USD for today, as I have run out of time on this one. Okay, let's see if we'll be able to take it tomorrow. That is the XAU USD. Let's see if we can take this one tomorrow. So on this note, I will want to be calling it a day here, but before I do, let's do a quick recap of what we talked about today, and for the sake of those who are not part of the live session, so that we can be on the same page as we head into the New York session today. So the first commodity we looked at this morning is the US oil here, and I told you how much I've been in a buy position right now, and I said I've already moved my stop loss accordingly to secure those positions by moving me to my entry zone. And I made mention that we might likely have another opportunity to add more position to this existing trade. Now, for those who had missed out on this opportunity, we were able to identify two setups for buying opportunity and a setup for selling opportunity. Now, to buy the US oil, to remain comfortable in a buy position here, we already have this bullish trend line, which we figured out after connecting the first couple of higher lows. So we have a bullish trend line here. So what this simply means is that as long as price remain above both the bullish trend line and the $77.90 level, we will remain comfortable in our buy position. And if the situation leads into price action breaking out of the $77.40 level here, we'll definitely be adding more position at the breakout retest of that level. Then a further breakout of the $78 level will be welcoming additional position. And there is a caveat to this current structure here, which I laid emphasis on. Remember, we identified a reversal pattern earlier where the $78 level is serving as a neckline of that reversal pattern. And during the later part of last week's trading session, we saw the breakdown of the $78 level. And you know, from a technical standpoint, whenever we have a breakdown of a structure, there is a likelihood that price will come back, do a retest of that structure to incite another wave of bearish momentum. So because of this situation here, I told you that if we are buying and price continue to move in our favor, as soon as price tests the $78 area, kindly move your stop loss accordingly to secure the current position, as we wait out and see how price action will be reacting to the $78 level to decide if we are going to be adding more position or getting ready to join another wave of bearish momentum. So if a breakout happens, then definitely we'll be adding position, but if we start seeing sudden pressure below that level on our lower time frame, then definitely we'll be getting ready to join a decline to the downside. Now, another thing I told you here about the current structure is that even though we are looking forward to buying opportunity here, we cannot ignore the possibility that sellers might likely come in, and taking into consideration the bearish momentum we have been witnessing here in the last couple of weeks, there is a likelihood that price could drop to the downside. And in order to identify a selling opportunity, if it's going to happen on this one, we have this bullish trend line to use as a yardstick for that. And how do we intend to use this trend line? Well, I made mention that if price action drops below the bullish trend line here, it's going to be a sign that the trend line may no longer have the capacity to continue to hold bullish momentum. And in fact, that trend line also shares a confluence with the $77.90 level area, and I said a breakdown retest of that structure, resumption of selling pressure below this level on our lower time frame will be welcoming a sell position here. And if price action continues to the downside, breaking down the structures, we shall be looking forward to adding more position to our existing trade. So that is my view there on the US oil, and I hope you screenshot my screen so that you can use it as a reference point when you are about to make your decision. Then we went on to talk about the US tech here, where we also have a simple setup here. That is, we have a channel where price action has been consolidating since the beginning of the week, which emphasizes the indecision in this current market. So we have a resistance point for the week falling around the 12,370, and we also have a support level for this week falling around the 12,320. And you know what we look out for here whenever we have such a channel is that we want to remain patient, look out for either a breakout of this channel to the upside or breakdown of this channel to the downside for trading opportunity. Well, for this one here, considering the fact that price is currently on a very big demand zone here, I am of the opinion that price action has a high chance of breaking out of the 12,370. So like I told you, we have a buy stop order right above this level where a breakout of that structure will be triggering our position. And if it so happens that price action continues to the upside, breaking out of the 12,400, we shall definitely be adding more position to our existing trade. However, in as much as we continue to look out for buying opportunity, we should not ignore that sellers could still be in charge of this market following the strong impulse leg to the downside. And in that case, if price action does break down the 12,320 level, I said selling pressure below the structure will be giving us an opportunity to sell. But I doubt if that is going to happen. But if it does happen, we want to be on standby to catch that move as well. Now, if a further breakdown of the area between the 12,250 level and the 12,200 happens, it will be another beautiful opportunity to add more position to the sell position if that is what is going to be happening for today. So it's a simple setup we have here. I wish us best of luck as we continue to monitor price action. Then we went on to talk about the USDJPY also, where we have seen a situation where price is also consolidating at this moment as price action is caught within the 134.500 and the 134.150 level since the beginning of this week. And I have told you that to sell the USDJPY, I want to see price action take out all the buy positions here, breaking down that structure, selling pressure below this level, then we can be getting ready to sell below that structure. However, if the buy pressure that we have been witnessing here in the last 6 hours continues, then price action breaking out of the 134.500 will be a beautiful opportunity to join a rally to the upside. And if a further breakout of the 135.00 level happens, then we want to be adding more position to our existing trade. Did we talk about the GBP USD? I don't think so. I think we moved on to the GBP JPY. So on the GBP JPY, sorry. I think 923 introduced the GBPJPY to us this week, and we were able to find a simple setup on the 4 hours time frame. So I have told us to remain patient here as price action is still caught within a consolidation phase. So we had a choppy situation here throughout the course of last week's trading session as price action remains between the 162.00 level and the 160.900 area. So we also have a channel, we also have a structure here which I said we want to be using to guide trading activity. And how do we intend to use this structure to take advantage of a trading opportunity? Well, it's very simple. I told you that if price action does break out of the trend line here, then we will looking out for buying opportunity above the structure and a further breakout of the 162.00 level, which happens to be the neckline of the reversal pattern we identified on the daily time frame, will be welcoming additional position. However, if selling pressure continues here in such a way that it breaks down the 160.900, selling pressure below the structure on our lower time frame, we shall definitely be getting ready to join a sell momentum from that area. So these are my views here on the GBPJPY 2 as well, and glad that we were able to attend to some of the situations, some of these pairs that we I think we did about 1, 2, 3, 4 pairs today, and we didn't have enough time to take through the gold medal. So I hope that by tomorrow we should be able to have enough time to treat the gold as well. So thank you very much for being around, and for those who are joining us for the first time, I hope that this session was very useful in helping you to make your individual decision during the New York session today. And on this note, I want to be calling it a day. I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. And let's come here again to review all the pairs we have been monitoring so far, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening. My Gigi, I see your comment. Thank you for the compliments and you're welcome. Do have a wonderful evening. Bye bye.